Hi, everyone. Thank you for joining us today. I'm Marche, the webinar director here at Advice Chaser. Before we introduce our guests and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars, such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. Well, we are thrilled to bring you today's educational event, and attendees are muted, but we do encourage you to ask questions using the chat box. Our presenters have agreed to answer those during or after the webinar today as appropriate. If you ask a question in the chat box, go ahead and leave your phone number as well. And if we can't get to your question during the event, we'll make sure someone reaches out to you after today's event. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. I'd love to introduce you to today's moderator and part presenter as well. Chohan Mcelderry is the CEO and founder of Monarch Wealth and Retirement Strategies. He is a certified financial fiduciary and has 22 years of experience in the financial services industry. As financial professionals, Chohan and his team are committed to help people create solutions for their retirement assets. Once they understand risk tolerance, time horizon, and goals, they work to develop a program that carefully balances investment strategies with preserving principal. And Chohan, why don't you go ahead and come off of mute and say hello so everyone can see you.
How are you doing? Thank you everyone for joining today. Look forward to digging into some of the topics, and thank you for joining us.
All right, and I'd like to introduce you to our other presenter today. Carly Chohan is a certified public accountant and tax director at Les Shapiro & Company, LLP. She earned her bachelor's and master's from the University of Miami School of Business. Many people have so much going on that they really don't focus on their tax and financial planning needs. And Carly and her team find solutions that allow you to achieve your tax and financial goals, allowing you to spend more time doing what you enjoy without having to worry about your tax future. And I know this is a presentation where we're going to have both of you speak, but Carly is going to be coming up first. So Carly, I'm going to go ahead and turn the time over to you.
Hi, everybody. And as Chohan said, thank you so much for joining today. I think this is a really interesting and important topic. When do you call a CPA? When do you call a financial advisor? And as I kind of mentioned in our intro, usually the answer is both. That really the CPA and the financial advisor, we really act as a team. Now, we do have very distinct jobs, and so it is important to understand maybe if one really is needed more than the other. So me, for example, as the CPA, my primary focus is going to be on taxes, whether it's the consequence or the planning part of it, and of course the compliance, the tax return preparation, but really that's where I am going to have my focus. Whereas the financial advisor, again, focus is going to be more in the plan, creating that plan and helping you with your management of the assets, whether they're investment assets or retirement assets, whatever it might be. But so again, we do have our specific focuses, and we do have our where we find that our professional abilities. But again, it's really the combination of us together where we really are able to help our clients achieve their financial goals. So me first, the CPA. So what exactly is a CPA? So CPA stands for Certified Public Accountant. I like to refer myself, though, as my client's trusted advisor. If you need something, come to me. anything. And now more often than not, if I cannot help you answer the question, I will be more than happy to find the person who can. So consider me really part of your financial and your professional team.
And I would just interject here. Obviously, Carly, you can't handle everyone in the U.S., but these would be the kind of qualities you might look for in a CPA, someone who wants to be a trusted advisor who can answer those kind of questions. Okay, I'll let you go.
Sure. And to actually add on to that, you're right in that CPAs can do a lot. They can also decide what they don't want to do. So there are some CPAs who are only going to be focused on bullet point number 1, which is the compliance. If you need a tax return prepared, you'll go to this person and they will prepare the tax return for you. Maybe they will help you with an IRS notice or a franchise tax board notice or something along those lines, but they're really focused on the compliance. Other CPAs will do the compliance. They will also then help you more with the consulting. That's where the planning comes in, the tax planning. Again, right now is a big, busy time, the year-end tax planning. We even can help with buying your business, selling your business, or someone passes away and now there's an estate issue, even down to helping you budget with your business or your personal needs, really help you look at the numbers and understand what does all of this mean and how it then can maybe roll into the compliance factor. And again, there's also CPAs who handle not the tax side of the CPA world, but the more attest and assurance services. So those are the folks who are going to be preparing your audits or your financial statements that lenders often need if you're purchasing, a real estate, let's say, or again, selling your business, buying a business. You want to understand the financial health of that business or of your business. And those are the folks who are going to be preparing that information for you. And then there's all of the stuff in between, whether it's the bookkeeping, the forensic accounting, and a lot more. So again, there is definitely CPAs who do one, who do all, or somewhere in between. And so it's just understanding what your needs are and then finding the right advisor for you. So again, the big question is, when do I need a CPA? When is maybe preparing, for example, preparing my tax return by myself not working for me anymore? If you have just a W-2, if you just are, you have a job and that's what you receive, you most likely do not need to call a CPA. The IRS, you can go on irs.gov. They have the ability to file your tax return for free online. And I highly encourage you to check that out if you are someone like that. But if you have more going on in your financial world, in your tax world, whether it's you started your own business or you work for yourself, or you experienced a major life event, whether you got married or divorced, or you received an inheritance, there are potential tax consequences that you really need to review with an advisor. Again, owning real estate or rental property, so again, if you're a W-2 employee, but you own your own home, you may need a CPA to make sure that you're taking, for example, the mortgage interest deduction, that you're looking at these types of things. A big one right now is foreign bank accounts or investments, whatever it might be. The IRS is looking hard on that and making sure that it's disclosed properly on your tax return is really a big hot topic right now. Virtual cryptocurrency is another one. And then lastly, if you have any issues with the IRS or the franchise tax board, for example, you owe back taxes or you have an audit, having a certified public accountant help you get through that. Yes, it will not only save you a lot of time and energy, but will probably save you a lot in money in taxes, because we have experience with being able to negotiate, hopefully for you, and maybe get you a better settlement.
Sean, I think we had a couple questions come in, and I don't know if you can see those.
Yeah, I can go through those real quick.
Appropriate to ask
Sure.
her.
So we do have one question kind of right in line with the section you're on, is how do you know what type of CPA you need?
So again, I think it's kind of going to go with the complexity of your personal situation. Again, I think going to your financial advisor and saying, here's what my situation is. You know me best. Do you have any referrals? At least going out and asking the questions is, I think, the first step.
Okay, that's perfect. And then kind of another question we have here that came in is, who do you go to for advice on retirement planning as far as taxes, health insurance, et cetera?
So that, I think, is a perfect example of the answer is you need both of us. So for example, Sean would be the one who would know what do you have in your retirement accounts, and how do they look? How are they growing? What are the projections from date of retirement through the statistical maybe endpoint, and then using me to then, okay, based on those numbers, let's see how the taxes work out and then plan accordingly. So you mentioned this planning for taxes and health insurance. What is that going to look like? And then what is your costs, what are your costs going to be? And then planning for them accordingly. A big one, of course, is those RMDs and the Roth conversions. What does that look like? What are the tax consequences going to be? And really modeling it out so we all can make an informed decision.
Perfect. And one more, are CPAs state specific?
So we are licensed by the state. So for example, I am licensed in the state of California. However, we are able to practice in other states. So for example, federal, it's federal. Every CPA can handle federal. And then when it comes to the states, for example, if I have a California client who has New York business or who has a rental property in another state, we are able to help them with the planning and also with the compliance.
Okay, it looks like we have one more, and then I don't know if you want to move to the next slide, Marche, but I could take this last one now.
Yeah, let's go ahead. Or if you think maybe wait, if that would be something we need to wait to the end.
Yeah, we can wait. That's fine.
Let's wait, because that's a little harder question to tackle. So let's talk about financial advisors. Go ahead, Sean.
Okay, so basically what is a financial advisor? When I first got into this career, it was really very focused at the time on the investment side. And that's what most financial advisors really were spending 90% of their time on. That's really evolved in recent years to where it's really a holistic approach, because the more people are getting complex situations going on, the advisor really becomes kind of your center point to all these different things that you might need to deal with. So you're a licensed professional that has to understand a lot of moving parts, really. And then knowing when to bring those right parts in. To Carly's point, if you talk to your advisor about, who's a good CPA that fits you, because you might not need someone that's super complex in what they do. You might need something more basic, or vice versa. We really are a partner in offering you guidance. People a lot of times focus on the destination, right? They focus on that point in time where they're no longer working, they're retired, they imagine themselves sitting on the beach with their drink with an umbrella on it, whatever it is that you see, right? But in reality, there's a lot of small steps that are happening in the meantime, and we call it transition planning, which I'll go over, I think, in another slide down here. But transition planning is really all those major financial benchmarks in your life, like Carly had mentioned. You're going through marriage, divorce, having kids, selling or buying a business, those types of things. But really, at the heart of it is we have to help educate you and truly get you the knowledge that you are going to need to make the decision. So if you think of it as more of an empowerment that we have the ability to do. So if you're looking for an advisor, you don't want someone that's just coming in and saying, hey, we can put your money into this particular investment. You need someone that's asking you a lot of questions, getting down to the root of the problem, and then giving you options that you can then decide what's the best fit based on what you've then learned. Like I was saying, when to call a financial advisor, you really need to have a roadmap. Like anything, if you were building a house or you were designing something, You don't just, go off of random things. You have to have a plan in place. There are a lot of things that we can do planning wise that I would say you could literally start out of college or high school, wherever you start your path where you're earning a living, so that you know what types of things to do. And as you can see on that slide, all those different things, those are the types of things that if they're happening, you should be calling a financial advisor that you work with, and bringing your CPA into the conversation, because it's kind of like a checks and balance here. The financial advisor is typically going to give you a very big view of everything and what to do with the assets and how to cover yourself in those goals, how to get to the goals. The CPA is really going to come in and help you clarify how to be more tax efficient. The advisors can do that to some extent. And, then you'll hear the term CFP thrown around, which is another thing. Personally, I believe that your CPA is going to be your best course to get your tax information, and your advisor is your best person to deal with the investment side. So if they're working together, you have two professionals that are really hopefully at the top of their game, that are constantly updating, and they're staying in a sense in their lane, and they're really ideally going to give you the most up-to-date information, if that makes sense. How does a financial advisor help me? Well, this is a big thing. Most of the people I talk to, and when we talk to the accountants that we talk to, it's a similar problem. A lot of people don't really know what they need help with. They just know that they're typically not feeling as prepared as maybe they want to be. They might be scared. They might have things that they're nervous about. I've literally had people that I met with that broke down in tears when we sat down. Like we went in for the meeting and they just started crying. We hadn't even started the meeting and they were literally crying. It's a very emotional thing because they feel sometimes ashamed. They feel like they haven't done the right things. Life's gotten in the way. So we try to put that, on the side in some sense and say, okay, well, let's look at what you've done right. And then let's create a plan to try to improve where you're at. So the whole idea is, whether you're 22 starting, whether you're 30 something, whether you're in your 50s and up and you're seeing retirement coming, it's really what our job is to take inventory of what you've done right and then try to give you some type of a roadmap to get to the next step that you're trying to get to. And if I could show you the meetings we have with so many different people where they thought they were much worse off than they really were and how much better they felt after talking. Once we bring all those professionals in and kind of help get them a plan, sometimes people aren't as bad off as they think, is I think important to know.
We had a couple questions here. Can you talk about are there people that are both a CPA and a certified financial advisor or fiduciary? And, if you wanted a one-stop shop kind of thing.
Well, and that kind of goes into what I was saying. CFP is a designation that a lot of financial advisors get. And I believe CPAs get that as well, Carly?
Yes.
Yeah, it's just a deeper level of certain aspects of tax planning. Most financial firms have CFPs and CPAs that they consult with depending on the complexity. But what I would say is there are many, many financial advisors that I would argue are as good or equally good, regardless of whether they have their CFP. I don't know if that's giving you anything different in terms of retirement planning, unless you have very specific tax situations that are happening through sales of businesses or, just complicated cost basis things that you're analyzing. That's where, bringing a CPA in should be equally as good or a CFP in general.
I want to jump in real quick on the one-stop shop part of it. There are some very large financial institutions, maybe your Merrill Lynch or your, Wells Fargo, who will bring in and have in-house CPAs, and they may prepare your tax returns as well. Those tend to be for the extremely high net worth folks, mostly because it's pretty expensive. Really for us, I don't want to say regular, but for the typical client, it's really going to be that you're going to engage a separate CPA you're going to engage a separate financial advisor. But I believe it's your duty to introduce them and make sure they act as though it's your one-stop shop, that they are in communication about you, or that you inform both of them about what's going on, so that everybody, again, can be on the same page and can be making decisions for you, not in that vacuum.
Can you talk
Yeah.
a little bit, Sean, about what an RIA, a registered investment advisor, is versus a CFP, et cetera?
So a registered investment advisor is, and it can vary depending on who you're talking to, but an RIA is basically where you have an advisor that's giving financial planning advice, and there are different levels and licensing requirements to that. So, for example, we're part of an RIA, and we have our 7 designation, which means I'm a fully licensed financial advisor and I can do financial planning. There are those that only do financial planning, so they're only allowed to get you access to a limited number of things. And they're also not, if they're just strictly an RIA, they're not regulated the same as a fully licensed financial advisor with a 7 securities license. So an RIA can do sufficient planning if they're just simply an RIA, but they're not necessarily going to have the ability to buy and sell everything that a fully licensed advisor, like you would think of a stockbroker or financial planner, has. The difference between an RIA and a CFP, you said, Marche?
Yeah, I just think there was some confusion about what those designations mean.
So a CFP is a certified financial planner. In the most basic sense, it takes a financial advisor and gives them, it's a year and a half long course that they take. And really what it's doing is adding an in-depth layer of tax planning to what they already know as an investor. It would be similar to a CPA going out and getting their financial advising license. So their focus in life is taxes, and then they want to go do planning on the side. The problem is when you start to blend these together, it never hurts to be fully educated and know everything. But the problem is, and I think Carly and I have talked about this many times, is she's very busy doing tax planning the bulk of the year, where as an advisor, you want someone watching your assets. It can be very challenging when a tax planner is working, day and night for 3 months, twice a year, and can't even see their family practically. Am I off on this, Carly? I don't know. How are they going to be?
She's shaking her head. She can't see. You can't see on the video, but she's shaking her head.
Sorry, you are 100% right.
Yeah. How are you going to have? The biggest question I have is who's watching our money? Well, there's different layers to that, but if your tax planner is distracted with, in a sense, their other job, the financial planning is something they do because they can. That to me is, I don't want to say it's a conflict because it's perfectly legal, but I just say if you want the best service, you want to have an expert in each area. So when you hear, if you start going down the Google rabbit hole of should I have a CFP, should I have this, should I have that, what you really need is a great CPA and a great financial planner that you can trust to work as a team. And then any other designations they have is great, but I don't think it's a requirement or some huge advantage. I hope that clarifies that a little bit.
What's the difference between a financial planner and a financial advisor? Just getting into some vocabulary here.
So when you talk, there's a lot of different words out there. Okay. I would say the simplest thing to think about is this: a financial advisor or financial planner can be interchanged. And I have to be careful on this topic because the way SEC and FINRA regulates all this changes constantly. But in general, if you have your Series 7, you have the ability to sell stocks, bonds, mutual funds type products. When you add in your Series 66 or 63 and 65, then you can do financial advising where you're doing like planning and you're going into a little bit deeper areas. But those licenses give you the full breadth of being able to do everything. Financial planner, financial advisor, wealth manager, wealth planner, stockbroker, these are all fairly interchangeable. So I wouldn't get too caught on that. The focus is what is their license? Just like if the financial person has a Series 6, That is something you'll find that a lot of bank employees get as they work up through the ranks. They get their 6. It's a fairly simpler test than the 7. They cannot sell certain products that the 7 allows. So the 6 is kind of more of an entry point. The 7 is the full license. Hopefully that clarifies that. But you really want someone that has their 7 is the point.
All right. And then would you go over really quick for our audience again, what the other 2 series that you mentioned were, the 55 and then there was one more?
Yeah, so there's a combination of either having the 63 and 65, which allows you to do more financial planning type aspects, or the 66 is a single license that covers both of those. So those give you more of the financial planning aspect and using third-party money managers. So it's just another layer. Most Series 7 professionals have either their 63 and 65 or 66. The area where I tend to find a little bit of concern is where you have certain professionals that only get their 66 and they're using a very limited product and they can't offer you the full investment spectrum. Or even if you have only your 6 and you can't have the full investment spectrum. So the big thing is, as a fiduciary, meaning a financial advisor's taken an oath to say, we're going to do by right for the client. Well, if you can't offer everything to the client, that can provide a slight conflict, in my opinion.
These are very good questions. I want to congratulate our audience that were some great questions.
We might know every title of every planner by the time we're done.
Let's go ahead and move on to this part of the presentation here.
So how do I ultimately choose a great CPA or financial advisor? So this is something that I kind of put some thought into, and I hear where people find help. Now, I think we all do this. We ask friends and family. We go on Yelp, or we look stuff up online. We ask, of course, asking a professional, throwing a dart. Sometimes that's what it feels like, right? I think you have to be very careful because friends and family especially, I've always joked that I have a lot of people that work at big Fortune 500 companies that we help, and they will have, all this insight. They tell me, hey, I've already figured it out. My manager at my job, my boss helped me. And I'm like, oh, well, who's your boss? And then they tell me, and oddly enough, I know them sometimes, and they'll say, well, my boss told me what to do. And I said, well, that's great, but your boss actually just consulted us, and they don't really know this very well either. So you have to be careful who you're getting referrals from. I think a trusted professional is probably a great starting point. Talk to someone you already work with. That's really key. Also asking them, who do you serve best? Just like Carly was saying, her and I had this conversation recently where it's like, I have a certain client that needs help. Do you fit the needs of that client, or are you not aligned perfectly with them? So I would say ask the advisor, who's your ideal client? Some financial advisors don't want to work with people under a certain dollar amount. Some advisors want to work with only, a certain specific client type or from a certain industry. So you want the person that knows your world as closely as possible, that's going to be able to really identify with you. Because at the end of the day, I always said our clients are like family. I have clients that have been with me since the day I started in this business, and they'll probably be here for many, many years to come. So you want to actually also kind of like the person. It doesn't hurt. You want to get along with them. I don't want clients that I don't like, that I don't relate to. And you probably don't want an advisor that or CPA that doesn't relate to you, that you're constantly feeling like they don't hear you. You need to be heard. And I think that's, when your spidey senses go up and you start saying, I left this meeting and I don't feel like I made a connection. Yeah, you might want to talk to someone else. So do they have a specialty? Do you connect? And also tell them what your expectations are. We have clients that have expectations that we discussed in the beginning, and then I know exactly what they want from us. And I can tell them, well, we can do this, but we can't do that, or vice versa. And have some thoughtful questions that relate to you. And I kind of even said here, don't just Google 20 questions to ask a financial professional or a CPA. That's a good start. But think of questions that really relate to you. what are your concerns? I think that's more important than just having some random list, because, there's always these questions that we get as advisors and CPAs of, well, do you have this? Did you do this? You should really be saying, have you dealt with these situations before? Can you work with me? What do you know about this? And if they have to get back to you on every single thing, that's a sign that maybe they're not the right fit. If nothing you ask them is being answered in a very high level or in-depth explanation, then that might be the wrong person. So you kind of have to learn that, in a sense, you're learning to be an interviewer and finding out if this person's good. I always say, and this is kind of one of the last things, is two things. I always offer my clients referrals. I think it's important that I say to people, listen, I work with a lot of people that you know or may work in a relationship with or similar fields. I'd be happy to give you a random list of people, and you can just cherry pick them, and I will call them to get permission, and you can call them and reach out. And then finally, look at the person and just look at how their demeanor is. And this is something that, we've hired contractors in the past that, you kind of had that feeling like, if something went wrong, is this the type of person that I'd want to deal with if there was a problem? What is their personality going to evolve to? Are they going to be the type of person that says, you know what, we're here to help you. Whatever it takes, we're going to get it done. Or are they going to say, well, that's not my fault. You knew going, that type of attitude. So those are some of the things that I think are really important. And, I'm happy to answer any questions on that.
Carly, I'm going to also ask you to contribute to this part about, what do you think are the most important aspects to finding a good CPA for you?
Sure. So pretty much echoing what Sean said, I honestly think, though, number one is that you guys like each other. When I'm interviewing with a client, I'm not interviewing because we're going to work together for 1 year to prepare your return or maybe one project. I'm interviewing you and you're interviewing me, I hope, to build a long-lasting relationship. Because I really think that when you work with someone for a long time, you build that rapport, you really have this understanding of the business or your individual tax situation, whatever it might be, you're actually going to get a lot more value. CPAs, I think, do a terrible job at marketing what we do and what more we can actually do for you. So I think that sitting down and having that discussion with your potential CPA, and I agree with Sean that you should definitely interview a few, but not only, again, that you have that connection, but that it's something that they can help you and that you feel like you can build this relationship for a long time. I really think that that's the main key. A lot of CPAs, a lot of, I think, financial advisors can do a pretty good job at doing a lot of things. It's just, are you going to feel comfortable working with them? And again, as Sean mentioned, everything's great when everything is good. But when something goes wrong, how are you going to work together to get through it? And that, knowing that your advisor, whether a CPA or financial advisor, will be there for you to help you through that.
Yeah. And I'd say the biggest complaint that I find in asking clients and also just understanding what people go through, even personally, is you want a CPA that is accessible.
Yeah.
And you want a financial planner that is accessible. So something they should brag about, as I always tell my clients or people that we're meeting and bringing on board, is, look, we are here to be accessible to you when you need us. We will get back as fast as possible. We have a team in place. So it's really about, because when you're going through this stuff and things do come up, you need to know that you can get a hold of your advisor. That's the biggest complaint in our industry is, I have this advisor. When I call them, it takes 3 weeks to hear back after I've called several times. And so that's one of the biggest things is if they don't brag about it, and you might have a way to ask them, how they handle that, but that's a big one. So, and then I have a few more questions here, Marche. Is this a good spot to do this?
Yeah, we're into the question and answer period. And because we had so many questions, I do want to tell people we do have a limited time to do questions. So go ahead and continue to ask those questions in the chat. If we don't get to your question today, please go ahead and leave your phone number as well, and we will make sure someone reaches out to you to make sure that is addressed. But I know we have a list that we haven't covered yet, so I'll let you get started on that.
So a couple for you, Carly. Are all tax preparers CPAs?
The answer is no. So first and foremost, if you are looking for a CPA, just like John was saying with checking the licenses, you'll want to check the license. You can go on the California Board of Accountancy and search for accountants, or CPAs, excuse me, to first of all verify they are a CPA, and second, to make sure that they don't have any complaints lodged against them. That might, be a good place to start. There are different designations. So there are EAs, those are enrolled agents. They can do tax preparation, they can do tax compliance. They typically, though, do not do any more than that. So again, if you just need a tax return prepared, an EA will probably be satisfactory. But if you do have more complex needs where the planning comes into play, if you have a business and you have a balance sheet and a financial statement or a profit and loss statement, and you need someone to help you look at that and understand that and really analyze that, a certified public accountant, a CPA, is going to be who you're going to want to look for that.
And along those lines, when you're engaging with a CPA, what does that typically cost, Carly? Like, how would you break down kind of a pricing arrangement, or what should people expect?
So unfortunately, there's not an easy answer for that. And again, it's going to be based upon the complexity of your personal situation. So, there's H&R Block, again, there's the free IRS for somebody who just needs a very simple tax return prepared. And those are maybe a couple $100s. There are accounting firms out there who do service smaller clients. There's also accounting firms out there who will only service the incredibly large. And then there's someone like me who's somewhere in between. So what I would recommend is when you meet with that person, if you do like them, they will give you a fee proposal. And again, based on what your particular needs are, is how they will, put together their proposal.
Okay, great. And this is kind of probably a two-part for you and me. If you want to take it from your side first, what are your thoughts on converting IRAs to Roth IRAs in light of some of the recent rate changes and the Jobs Act from 2017?
So first and foremost, I do not have a crystal ball. I do not know, exactly what will happen as far as final tax laws are officially passed and what rates will be. However, again, this is a conversation to have with your advisor and with your CPA, because depending on your income level and depending on the amount you want to convert, you're going to do an analysis. You're going to find that quote unquote sweet spot. I will say that it can be an incredibly powerful tool, especially if some of these tax laws do change and rates go up and there's thresholds based on your income level. It can be a very powerful tool, but I would not feel comfortable giving specific advice at this time, but that would be something I would be more than happy to sit down and help a client out with.
Yeah. So, and I'll kind of add to it from a financial planning aspect. Roth conversion is a very popular topic because, I think in general, and I think we all have to be careful about when you hear these things, them talking about taxes are going up, taxes are changing. I talk to clients every day that we have this conversation, and one common thread is the majority of the people that are having this concern usually are not really that affected.
Right.
In many cases, it's minimal, and I see Carly shaking her head. The bulk of our clients, in fact, when they finally reach that point in retirement, because of the way their income is coming in, they're not typically in super high tax brackets. And unless you are really in a high income in retirement, making big money, your tax brackets are going to be very reasonable in retirement. So you have to really do an analysis, which a good financial planner should be able to do. But you have to be careful with that, because a lot of financial planners and tax people will encourage people to do these Roth conversions as a way to attract you as a client and start that conversation, whereas it may really be the worst possible thing. So I think it depends on your situation, and we have to analyze it, because it would be foolish to do a Roth conversion and hand over tons of money if it really depletes your account and you can't get back to where you were So we can use cash flow planning to figure that out is the basic idea. So you have to do an in-depth analysis and then run it by your CPA. But it's probably a two-part thing, but really consider that before you do it.
Agreed.
And I think in general, tax laws change. Sometimes we talk about these big falling off the cliff changes, but in my experience, and Carly might add to that, they don't tend to always be as quick as everyone thinks.
Definitely. And the other thing to keep in mind is they may change for 4 years and then they may revert back in 4 years. And if you're not going to be retiring for 20, what do you really care about right now? You know, that may not be in your current time horizon. So and as Sean was kind of mentioning, first of all, it may not even apply to you. And second of all, I think there's a lot of panic when there is this impending change. But until the change, you know, and yes, there's definitely certain things that are going to change, and we know that, and we need to plan accordingly. But if there's a lot of this unknown, it's also understanding, well, what is your risk tolerance? You know, what are you willing to potentially forego some of this now in order to get some of this maybe later? And again, it cannot be planned in a vacuum. It's a conversation to have with your professional team and to really find out what's the best solution for you.
Exactly. And then going back to part of this one question was, what does it cost for a financial advisor? That's similar to what Carly's saying. It depends. The way most financial professionals are paid today is one of three ways. There's still the commissioned approach, which is where you pay for something. And that's where you're really not engaging with the advisor. It's more like they buy you something and there's not much planning that goes on. It's more of a, you bought it and then you just let it sit there and they don't really do anything for you. Then there's the planning for like a fee, okay? Fee-based planning where essentially this works very well with people just starting out where they don't have a lot, but they want a very in-depth plan of what to do. So we might charge a flat fee either hourly, or we can give you a consultation and say, look, to do everything, it's going to cost you this much. And then we'd help you align all the moving pieces of estate planning and insurance needs and working with the right CPA and whether you need to refi. We kind of go through the whole thing. And the third way is just a percentage base where it's a percentage coming off your assets, just like you have if you have 401ks or IRAs right now. You're paying a percentage in there, whether you know it or not. There's a percentage that comes out. That's the bulk of how our clients engage with us is we bring them on board and we're in it with you. If your account's going up, then we're getting paid more as you're increasing and vice versa. If it's going down, then our fees are dropping with it. Another question I'll just add to that everyone always asks is, well, if I'm losing money, do I still have to pay you? Yes, they're outside of some things you might hear that imply otherwise on a few commercials every now and then. In general, it is not legal for a financial firm to stop charging you simply because the market drops. Remember, you need your planner when the market drops. That's when they work the most. They're trying to keep your head in the game, get you back on track. And every business in our industry would go basically close their doors if they couldn't charge you just because the market was down for a year or 6 months. So that's something that hopefully is simple enough, but that would be the three things. And then we have, let's see, a couple more questions here. Here's one for Carly. What are the most common mistakes that people make when preparing taxes without a CPA?
Ooh, that's a good question. I think a lot of mistakes I see, I'll say first is a sole proprietor. So maybe a Schedule C, they own their own business. Maybe they have an employee or two. But in the prep, they think maybe that they should just write off everything in the kitchen sink. Needless to say, I too personally want to pay as little tax as possible. But what they forget to think about is I'm a sole proprietor. I want to go to the bank because I want to buy some equipment and I'm going to need to show my tax return to show that I can afford this piece of equipment and get this loan. Well, your return looks like you are just losing money, left and right because you're showing this enormous loss on your tax return. So it's like, you want to, again, we all want to pay less in tax, but sometimes it actually makes sense to pay some tax now because in the future, it's going to benefit you. Again, that could be even in the event of a Roth conversion, pay the tax now because it makes sense for something down the road. Another area I find is, for example, what form to use. There are many forms on the tax return, and they're there for various reasons, not only because the IRS has designated them as such, but because the income or loss that is generated on that form is taxed in a certain way. And if you, for example, put a rental property on a Schedule C, or you put your Schedule C business on a Schedule E for a rental property, it's going to be taxed differently. And that can get you into some serious trouble. In fact, I had a client recently where they have a Schedule C business, but they also have rental properties, and everything was reported on a Schedule C. And sure, that the tax consequence to her was nice, but the way that the laws are written, that's wrong. And if the IRS were to catch that before we did, the penalties would have been astronomical. So it's really making sure that aside from the obvious, which is using the right form, it's also thinking about your future and current financial goals so that your tax return reflects that.
And the last one is, how often should you meet with your CPA and your financial planner? Well, as far as the financial planner goes, I think in general, having an annual checkup with both is important, and I'll let Carly add to that. But for the financial advisor side, it does vary. And I think what really happens is it comes in waves with your financial planner. When you're dealing with transitions, those life-changing circumstances financially, you're going to be engaging with your financial planner quite frequently. When we're preparing someone to retire, we might be talking several times a week over the course of a month or two, getting them ready for that. Whereas once they're off and situated, many of my retirees actually get a little annoyed when I call them because they're busy retiring. They're busy enjoying life. And, I commonly get, what are you calling me for? And it's like, well, I just want to do a checkup. And they'll often say, well, hey, I don't need anything unless something's wrong. I'm good. So what I've found is I ask my clients, what do you want? What are your expectations? And then I tell them what we normally do. And we come to some kind of terms of what works for that person. And I think that's important. You want to add to that, Carly?
Yeah, no, I was just going to say, first and foremost, it's up to the client and how they want to handle the relationship. If they're not sure, I'm going to say at least we need to meet or just talk 2 times a year. The first, which is obvious, is around tax time. We need to prepare your return. We got to get that filed. That's pretty obvious. But really, the most important time for most taxpayers is right now, is this end of the year. This is the time where it's time to do your year-end tax planning. It's to really figure out what can we do before the end of the year, either to increase your earnings, to decrease your tax liability, to think about retirement plan contributions, maybe setting up a retirement plan if that's something that's appropriate. But a lot of these things need to be done before the end of the year. Again, the tax return is really the end piece. You're not going to build a house and first get the roof. What you need to do is build that foundation. And so fill it up with all of the furniture and all the other good stuff. That's the planning. That's really where the CPA is going to add the most value to you. In addition to, of course, your advice from your financial advisor and seeing where do you stand from that perspective. And then again, you put the roof on right at the end on April 15th, well, hopefully before. And that's really the final piece of the puzzle.
And one last question is, if I wanted to learn how to properly do maybe just a portion of my taxes, let's say if I have stock in an MLP and there's some new tax paperwork for me to be understanding, will they be receptive to help teach so I can handle it myself in the future?
I think it's going to be a case-by-case situation. I've had situations where a client prepares their own return and pays me more or less to review it and maybe add some additional consulting or planning opportunities. So again, I think that's a case-by-case basis.
Yeah, I'll just say that, I think we're, everyone should be cautious in when you take things on yourself, is that when you've done this as long as Carly and I have, or many financial professionals, when you see how many conversations we have with people, if you witness like how many people we talk to, and a common thing that happens is we get into these conversations and we start asking lots of questions, and then people are like, oh, I didn't know that. Oh, I didn't realize I was making that mistake for the last 10 years. If I had only known. So it's not so much, I think when you think about saving to do certain things on your own, that's great if it's super simple, but it's not so much what you're saving, it's what you're missing out on or what the cost is. So we call it opportunity loss in our industry, is you lost because you didn't simply know better. And I think, so whenever you think about cost, you have to think about, do you really want to become essentially your own professional? Because, you know, the amount of information that we need to do our jobs actually correctly. And I will say there's a lot of financial advisors that, as you get to talk to them, or CPAs possibly even, is I would argue that there's a lot more than just passing a test in our job descriptions. It's about knowing how to take all this data and now use it in the real world to help people. Because it's one thing to know, it's another to do. And so that's what I always try to help clients understand is, you know, you can go do anything you want and save fees, but at the end of the day, it's the things that you're not seeing because you simply don't do this every day.
And to add just a little bit to that, you know, finding the right professional also does mean finding the right professional within your budget. There are going to be accountants or CPAs or financial advisors who are more expensive and who are less expensive. And that is obviously an important consideration. But again, you do get what you pay for. And if you are somebody with a very complex situation, but you decide to go the more, I'll say, budget-friendly route and use a professional who is not able to really handle your particular situation, but you chose them because of the cost, as Sean said, you may be losing out. And so it's something to really think about when you are interviewing for a potential CPA or financial advisor.
Yeah, and I'll say one last thing just to kind of end that thought, because I think it is important. A lot of people kind of get caught on this is, you know, I think none of us like to pay for things we don't necessarily need, or
Yes.
You know, I find it's funny. Some of our most successful clients, some of our smartest clients actually can have the hardest time with bringing a professional in because they tend to control their worlds a lot. They are in control. They work in a job where they manage 100 people. They run a business. They've been able to juggle hundreds of different moving parts to get to where they are in life. And so they're not used to saying, hey, I need help. And these are highly complex things where the question is, what level of, you know, quality do you want around whatever moving parts you're dealing with in your life? And that's where bringing someone in, you know, even just for a consultation, it can be worth it. Spend a little bit of money, or have, you know, many people will offer a complimentary consultation. We do. I know Carly will talk to you.
Yes.
And I think that's important to see if we're aligning and going to be able to do something that's going to improve where you're at.
Well, folks, I think that's about all we have time for. I want to thank both Carly and Sean. What an informative webinar this has been. And probably I need to thank the attendees as well. What wonderful questions. Thank you so much for participating. We do appreciate it. Oh, we're getting some thank yous in the chat. Thank you very much. We appreciate that as well. Thank you for the organizations that have worked with us to bring you this webinar today. Attendees, look for an email soon with a link to the replay of this event, and you're welcome to share that replay with your friends and family. It will also be posted on our website under recorded webinars. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your questions. Our matching service is free to you, and every one of our advisor partners is committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much, and thanks for all the comments. It's very, very encouraging, folks. Thanks a lot. We'll see you at another webinar soon. Goodbye, everyone.
Thank you.
Thank you.